5 mistakes you should avoid when doing your tax return. Tax season can be a stressful time for many people, whether you're a seasoned filer or new to the process. Filing your tax return accurately is crucial to avoid penalties, delays in refunds, or even an audit. Unfortunately, many taxpayers fall into common traps that complicate the process. To help you navigate your taxes more smoothly, here are 5 mistakes you should avoid when doing your tax return, along with practical solutions to ensure you file accurately and on time. 1. Filing late or missing the deadline. One of the most frequent mistakes is filing your tax return after the deadline has passed. Many people underestimate the time and effort required to prepare their taxes, which leads to last-minute rushing or even missing the deadline altogether. Late filings not only delay any potential refunds, but also result in penalties and interest charges on unpaid taxes. Procrastination is often the root cause of this mistake. Some individuals put off filing because they find the process overwhelming, while others may not be fully aware of the filing deadlines. Missing these deadlines can add unnecessary stress to an already challenging task. How to avoid it? Set reminders. Mark tax deadlines on your calendar or set digital reminders weeks in advance. Organize early. Start gathering necessary documents like W-2s, 1099s, or investment statements as soon as tax season begins. File for an extension. If you're unable to meet the filing deadline, submit Form 4868 to request a 6-month extension. Keep in mind, however, that an extension to file does not extend the deadline to pay taxes owed. By planning ahead, you can avoid the stress of rushing and ensure you file your return on time. 2. Failing to report all income. Another common error is failing to report all sources of income. This can happen unintentionally, especially if you have multiple income streams, such as wages, freelance earnings, rental income, or investment returns. Many taxpayers forget to include side hustle or gig economy income, believing it won't be noticed. However, tax authorities like the IRS cross-reference your tax return with the income reported by employers, clients, and financial institutions. If there's a mismatch, it can trigger an audit or lead to penalties for underreporting income. How to avoid it? Keep a checklist. Make a list of all potential income sources, including traditional employment, freelance work, dividends, and cryptocurrency transactions. Ensure you have all forms. Wait until you've received all relevant tax documents, such as W-2s for employment income or 1099 forms for freelance or contract work, before filing your return. Track non-traditional income. If you earn money through platforms like Etsy, Uber, or Airbnb, maintain accurate records and include this income in your tax return. Reporting all income ensures compliance and protects you from potential penalties down the road. 3. Overlooking deductions and credits. Tax deductions and credits are valuable tools that can lower your tax liability, but many taxpayers either miss claiming them or apply them incorrectly. Deductions reduce your taxable income, while credits provide a direct reduction in the taxes you owe. Overlooking these opportunities means you could end up paying more in taxes than necessary. Some common deductions and credits include student loan interest, medical expenses, the child tax credit, and the Earned Income Tax Credit, EITC. Missing these benefits often stems from a lack of awareness or poor record keeping. How to avoid it? Research available deductions and credits. Familiarize yourself with tax benefits that apply to your situation. For instance, if you've been working from home, you may qualify for the home office deduction. Use tax preparation software. Reliable software can help identify potential deductions and credits based on your input. Consult a professional. If your tax situation is complex, a tax professional can help ensure you're claiming all applicable benefits correctly. Properly utilizing deductions and credits can save you significant money and make your tax return work in your favor. 4. Making errors on tax forms. Errors on tax forms are one of the most preventable mistakes, yet they happen frequently. These include typos in personal details, incorrect Social Security numbers, and math errors when calculating income or deductions. Even small mistakes can lead to processing delays or penalties. How to avoid it? Double-check personal information. Verify that all details, such as your name, address, and social security number, are entered correctly. Review calculations. If filing manually, double-check all math calculations. Using a calculator or spreadsheet can reduce errors. Leverage tax software. Most tax preparation software automatically performs calculations and flags inconsistencies, reducing the chance of mistakes. By taking the time to review your return, you can avoid unnecessary delays and ensure it's processed smoothly. 5. Forgetting to sign and submit your return. Surprisingly, one of the simplest yet most common mistakes is forgetting to sign your tax return. An unsigned return is considered invalid and may be rejected by the IRS or local tax authority. Similarly, failing to finalize the submission process can leave your return incomplete, causing you to miss the filing deadline. How to avoid it? Manually filed returns. Always double-check that you've signed and dated your return before mailing it. E-filed returns. Follow all prompts to complete the submission process. Most software will confirm when your return has been successfully filed. Save a copy. Retain a copy of your signed return and confirmation receipt for your records. Taking a few extra minutes to ensure your return is signed and submitted can save you from costly mistakes. Bonus tips for a smooth tax season. Stay organized year-round. Keep all receipts, statements, and tax-related documents in one place to make filing easier. Understand tax law changes. Stay updated on tax law changes that may impact your deductions, credits, or filing requirements. Set up direct deposit. Opt for direct deposit to receive refunds faster. Consider professional help. If your tax situation involves complexities like multiple income streams or investments, consult a tax professional. The importance of accurate tax filing. Accurate tax filing is not just about avoiding penalties, it's also about optimizing your financial health. Filing correctly can help you secure a faster refund, avoid audits, and stay compliant with tax laws. It's an opportunity to evaluate your financial habits and ensure you're making the most of available deductions and credits. Taking the time to file your tax return accurately may feel like a chore, but it's an investment in your financial stability. By avoiding these common mistakes, you'll set yourself up for a smoother tax season and greater peace of mind. In conclusion, filing your tax return accurately and on time is crucial for avoiding unnecessary penalties, delays, or audits. By steering clear of common mistakes like missing the deadline, failing to report all income, overlooking deductions and credits, making errors on tax forms, or forgetting to sign and submit your return, you can ensure a smoother and more stress-free tax season. Preparation and organization are key. Start early, keep detailed financial records, and double-check every aspect of your return to minimize errors. Leverage tools like tax software or seek help from professionals if needed, especially if your financial situation is complex. Remember, tax season is not just a time to fulfill a legal obligation. It's an opportunity to optimize your financial health. By taking the time to file accurately, you can maximize your refund or minimize your liability, all while avoiding costly mistakes. With proper planning and diligence, you can approach tax season with confidence and peace of mind. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.